PM Najib said 1MDB's failings and governance lapses were valid causes for concern for a government-owned entity. During his keynote address at Invest Malaysia, he said he isn't going to brush over the issue and that the nation has learned lessons from 1MDB, which is why he had ordered one of the most comprehensive and detailed investigations in Malaysia's corporate history, one that involved multiple lawful authorities, including a bipartisan parliamentary body. Their findings were taken on board and the company's board was dissolved, its management team changed and its operations reviewed. He went on to say that 1MDB has since rationalized its assets and have used the proceeds to aggressively reduce its debt. The company also made sure that two of its most valuable assets, Bandar Malaysia and TRX, remain attractive investments. He claimed while 1MDB has its failings, there was a concentrated campaign to sabotage the Malaysian economy for political gains. In his own words, he said challenges at 1MDB were amplified and used as a tool to suggest that the economy is collapsing. EPF CEO Shahriul Rizal Rizwan is warning investors of a pullback in the local stock market in the medium term. But overall, he says that the KLCI is likely to continue its good run this year. He noted that there are a lot of companies that have shown resilient growth in the past few years, as seen by their diversified earnings, with revenue coming from different markets around the world. Shahriul also said that the Malaysian government has been talking closely with the US on EPF's application for sovereign status that will allow the fund to invest more effectively in the US in terms of infrastructure or real estate investments. Shahriul also reiterated that the investment with PNB on the Battersea Power Station development in London was an ideal one for long-term funds like EPF and PNB, who are in the position to deploy capital through many cycles. This compared to developers that were more focused on short-term profits rather than long-term. Digi.com saw its fourth quarter net profit decline by 3.9%, due in part to finance costs. Bottom line came in at 360 million ringgit compared with 374.6 million the year before. Revenue also slipped by 1.5% to 1.64 billion ringgit. Despite the lower numbers, Digi declared an interim dividend of 4.6 cents per share. As for its full-year report card, net profit declined by 9.6% to 1.48 billion ringgit, while top line slipped 3.9% to 6.34 billion compared with 6.6 billion last year. Despite the softer number, Chief Alban Murty says Digi is well positioned for future growth and continued sustainable shareholder and customer value creation. He adds that the company enters 2018 with confidence, is founded on its investments in next-generation network and digital capabilities to capitalize on opportunities for growth. Malaysia Building Society has said that there would be no staff layoffs after it got the nod for the acquisition of the Asian Finance Bank. Its chief Ahmad Zaini Othman said the only exception would be a couple of management staff under contract. He explains that there would be no VSS or MSS at this stage, and it has engaged its HR consultant to look at the best fit for the new bank. It hopes to complete the staff integration by March this year. To recap, MBSB purchased AFB for 644.95 million ringgit. It would give the non-bank lender a license to become a full-fledged Islamic bank. The merger will create the country's second-largest Islamic bank with total assets of some 48 billion ringgit. Ahmad Zaini said the integration has already started. He adds that one of the key opportunities it's looking at is making inroads in the trade finance business platform. It also wants funding opportunities for the CASA accounts and looking into other businesses with fee-based income. Top Glove Corp says its financial health is not compromised as it hunts for more M&As, as its earnings could see a double-digit boost from the combination of organic and inorganic growth. Chairman Lim Wee Chai admits that while organic growth requires less investment and gives better profits, whereas M&A costs more money, but there is still value. He adds that the company intends to construct 2 factories, besides acquiring 2 to 3 companies every year, which will pave way for a double-digit growth in the group's top and bottom line. Explaining that as the group's base becomes bigger, growth would be very small if it only builds 1 or 2 factories per year, with growth rate at only 3 to 5%. To recap, Top Glove had recently inked a conditional share purchase agreement with Adventa Capital to acquire the surgical glove maker Espion at 1.37 billion ringgit.